Yeah, that's right. I could sit and listen to that all day. That's the problem. We've been selecting, Greg Schott and I have been selecting the music for this intro and stuff, and obviously we're choosing stuff I like, so there you go. That's a problem, though. It's time for this week's Quote of the Week. Scientist Alfred Beaton, he focuses on environmental issues, said in response to the incredible number of people who continue to quote the projection of models as if they're fact. Quote, "No, you're completely wrong. Models are merely mathematical constructs based on physics and are never evidence. No scientist claims they're evidence. Such a claim would be absurd. Evidence is hard data taken from the physical world." End of quote. Oh, I got to do that one again because this is a beauty. You hear this relentlessly. Finally, obviously, he got frustrated. In quotes, "No, you're completely wrong. Models are merely mathematical constructs based on physics and are never evidence, and no scientist claims they're evidence. Such a claim would be absurd. Evidence is hard data taken from the physical world." Very pleased to welcome back to the show right now Jeff Olin. Been doing a fabulous job for them at Vision Capital, investing in real estate throughout North America. Jeff, appreciate you finding time for us.
Thanks for having me.
Hey, let's start with just this, just to introduce people. I hope they know Vision Capital because the track record has been incredible. And I'll allude to that a little bit because it deals with my first question. And that is, okay, I mean, real estate's been a hot topic. We've got these record low interest rates making borrowing for real estate more attractive. We've got a lot of people doing that. But I want to talk about doing that through the stock market compared to sort of, I'm going to buy a couple of condos.
Yeah, I mean, there's a number of advantages as to what we do, which is, as you say, we buy real estate through the stock market as opposed to the property market. And the first thing is the core and heart of our strategy is that we look to buy real estate that when you look at the underlying real estate in the public entities is trading at a discount to the value of the collection of real estate. So by definition, you can't buy real estate at a discount in the property market to the property market, and vice versa. Shorting names, we can short stocks to take advantage of real estate that's overvalued in its share price relative to the value. That's one key advantage. Secondly, you got liquidity. You don't have anybody calling you in the middle of the night to fix the heater. You can diversify by geographic region and by property type, whereas most real estate investors invest in their own backyard, which makes sense, but we can invest, as you said at the outset, globally. North America is our focus. And you can move. I mean, we went from being bullish Alberta to bearish in Alberta in 10 days. It's hard to do that if you own a bunch of bricks and mortar.
Actually, we had a lot of examples of that recently after the Brexit vote. You know, those private, they had some private real estate funds that really suffered because of redemptions, because obviously it's tough to sell your real estate 10 minutes later. You know, got a group of people saying, I'm worried about the results of that referendum. I want out. Well, that's not so easy. So they stopped actual redemptions. Very different, as you're saying, by the way. And I don't want to go on about this because I got to get some more opinions on the markets from you. But still, the liquidity thing has really jumped out at me. So, for example, it's just like a stock. You want to get out of something. I mean, it's far less expensive, and you can do it very quickly.
Yeah, I mean, Berkshire is a perfect example. You've got all these private REITs in Canada, United States. You've got these funds. You know, people think because they're brand named. You know, you've got Aviva and large Standard Life funds, and people plow into them. They're big, and I got quality. I got these major institutions. But it's a fallacy. It's always a problem when you have the structure of a fund, any type of fund, mismatching the underlying investment strategy.
Jeff Olin is with me, co-founder of Vision Capital. You can find them at www.visioncap.ca. One other thing, I'll get to the fund in a second in the real estate market, but one other thing that you get to do that I think is basically essential nowadays is you can go both long and short in your strategies. Because I know when you first came on here with us, a while, it's at least 2 years ago, you said, hey, look, I don't like Calgary. I don't like the office market there. And so you were giving us an example. You said, I'm playing Dream Office REIT to go down. You'll find this humorous. I'm just finding that recommendation in some other services right now, but you've been on that for a while. But it's a real advantage, though. I mean, to make money in that down market.
It's key. I mean, we were short Dream Office REIT for 4 years, and there was nothing wrong with their assets per se. nor the management. But we looked at 7 million square feet of new office space being built in Toronto, 5 million square feet in Calgary, where they're concentrated. Every office market in Canada, including Vancouver, your home, is in overbuilt. So too much supply, not enough demand. And in Dream's case, they suffered from a misalignment of interests with an external management contract, which incented them to grow, not necessarily grow profitably, but grow. So they bought all these buildings in the wrong markets at the wrong time. And that's an advantage. And people say, well, how do you short a $34 stock that has a 7% yield or a 6% yield? And they say, how do you short a $25 stock, has a 8-9%? Well, they announced a $700 million write-down, $700 million write-down on Thursday of this week on a market cap of $2 billion. So, we were early, but we've told your listeners in the past, don't be seduced by yield, and this is a poster child.
Let's talk a little bit about let's not being seduced by yield, because, of course, in this record low interest rate environment, someone looks at what they got in their savings account, so they want that yield. And what do you mean when you say don't be seduced by that number?
Well, one of the advantages of real estate investment trusts is the yield. It's increasingly important as we have an aging population and people rely upon that income. But don't buy anything at any time based on yield. You must look at the underlying cash flow, what's being generated, and how much of that cash flow is being paid out in terms of yield or dividend on a forward-looking basis. And so people are attracted to high yields, but often there's a reason for high yields, and so you got to look at total returns. Last year, in 2015, the Canadian REIT sector had 3 months, May, August, and December, where the stock price went down over 5% and destroyed the yield for the year 3 times. So, and every year this happens. We're happening this month, in fact. This month, I think the REIT sector in Canada is down over 3.5% so far, and we're now in the middle of the month. And so you got to look at total return. And that's really the key. And, the Globe and Mail had this article this week profiling all these REITs that had high yields. Well, we'd be short most of those REITs.
Yeah. I just, again, bring it back for the audience. Think about this. They're paying out 7% dividend, but it's 100% of the cash flow they got. That's not a recipe for success going forward. I got to take a break, Jeff. I got so many questions. We'll go through which kinds of real estate you like. Whereabouts is it? Because you're both in the States and in Canada. Jeff Olin is my guest, co-founder of Vision Capital. You can find more on Vision Capital at www.visioncap.ca. More with Jeff on the Money Talks Network. Coming up, I've got a great shocking stat for you. Oh, to be young again. Well, maybe not. My shocking stat in just a few minutes' time. But right now, Jeff Olin is with me, co-founder of Vision Capital. You can find them at www.visioncap.ca. But I'll give you a number, 220%. 220%. That's the rise in Vision Capital's Opportunity Fund, the Vision Opportunity Fund. That's just from July 2nd, 2008 to June 30th, 2016. Just to give you an example, though, the TSX had gone up 27.4% in the same period, 220%. I think a lot of that is to do that they can go both long and short, pick markets they like, take advantage of markets they don't like. And Jeff, that's what I want to talk about for a second here, is markets you like and markets you don't, or types of things. I'll just throw a couple out as an example. What do you think about multiple family apartments, for example, in Canada?
We like apartments on both sides of the border. You've got some powerful demographic and secular trends. You've got 66 million Americans between the ages of 18 and 34 years of age, and the millennials, they live in apartments. When my parents got married, my parents are in the 80s. They got married 20, 21 years of age. Now young adults got married 28, 30. They live in apartments. Mm-hmm. My parents had 4 kids by the time they were 25. Now young adults have kids 28, 30, 32, 38. Mom, I think I still have a baby. Lifestyle value choices. They don't care about saving money for houses. They want to have the latest iPhone and the best internet streaming package. You go to restaurants, all leading to rental residential. Everybody knows about the seniors. Seniors aging in the population, living in apartments. So we like apartments, and in most markets in North America, supply and demand is in balance.
Yeah, so that's what you'd be looking for is the imbalance between supply and the demand for those markets. I love that, by the way, the exposure, obviously you've done very well with your exposure in the States because the Canadian dollar's fallen. So it's not just been a hedge, it's actually been a big moneymaker on that side. Let me just go then to things like industrial warehouses, that kind of stuff.
Yeah, another sector we like, there's a fairly new TV show called Orange is the New Black. Well, Orange is the New Black, industrial is the new retail. We're cautious on retail because of the impact of e-commerce, and industrial real estate is the beneficiary. Logistics space, warehouses, both sides of the border, in fact, globally. We like that space. It's a growing space, and it's just an attractive space to be stable, reliable, predictable, boring. Wonderful place to be invested.
You know, one of the areas that I like, but I'm not doing with the level of sophistication you are when you're approaching the markets, but I kind of like retirement stuff, as you just alluded to, and it's been, obviously a big talk. It's not a topic of conversation to the degree I'd like, the aging population, because we ignore the impact on healthcare, we ignore the impact on public sector pensions, but still, we kind of get that we're all getting older. I'm leading the way there. What do you think of that kind of stuff, like retirement residence or healthcare, or am I a little bit off base there?
No, I think you're right on. I mean, to a couple aspects. One, it fits into my earlier comment about the fact that we like the rental apartment space. Another great thing about it is financing. You get the apartment owners, landlords can have access to cheap and accessible mortgage financing because of CMHC in Canada and Fannie Mae and Freddie Mac in the United States. Even in the depths of the credit crisis, apartment owners, as opposed to other forms of real estate, could access cheap financing because of the government guarantee. Same in retirement homes. You can get CMHC financing. And it has the other benefits of multifamily, but as you touched on, it has an extra benefit of higher growth because the leading edge of the baby boom turned 65 in 2011. None of us are getting any younger. People can afford this stuff, and there was a bit of oversupply a few years ago. That's sorted out. So we like that space, and we've seen a big M&A activity in that space, and it's taken out a couple of Canadian names already in the last 12 months. But there's a couple of Canadian names left, Chartwell and Sienna, and we're invested in both of them. We like the space.
Just a quick take on Alberta. I know this is always tough. I mean, I'm like, I always say I'm like the Barbara Walters of the financial set because I say in 25 words or less. But still, can you give me a hit on Alberta?
Yeah, I mean, we've again, it goes back to your initial comments. One of the advantages of what we do is we identified early on, we didn't know oil prices were going to crater. Let me be clear about that. But we saw too much oversupply. We're cautious in Alberta. The office market is going to be bad for a long time. You got 20+% vacancy rates. Rents are come down about 70%. We don't have the demand. You're going to see Class C office buildings in Alberta demolished, destroyed, for put into land, so they don't have to pay the tax. Maybe they put them in a parking lot or build a residential. We're cautious in Alberta, and we can do something about it, unlike those in other forms of business or real estate, by being short, and we're short on Alberta.
Let's go to BC for a second. I mean, obviously, you've got a ton of play. The 15% foreign property tax that came on. Does that change your mind on BC? How do you figure it, or you didn't like it anyways?
No, I mean, we like BC, and we're not really impacted by single-family residential, to be clear, in our fund. But in terms of our big picture understanding of the markets, it ain't going to work. It's a flaw. It might be attractive politically. There's a label, Tobin tax, which is a tax on speculation. You're not going to have a material impact on that issue by trying to artificially constrain demand, which has all kinds of loopholes people are going to get around. The only way to deal with a problem like this is supply. And environmentalists, we're environmentally sensitive, but you've got these huge swaths of land, agriculture reserve lands out there, and it might be political heresy, but is it really environmentally sensitive for you to build all these highways and infrastructure so people drive by these agricultural lands to go, miles and miles away, build occasionally, public infrastructure to get there as well, subway? Wouldn't it make more sense? You got a lot of land out there in BC to make those reserves farther out and increase the density and have more dense population closer to the urban center. That's a more efficient and environmentally sensitive way than motherhood of having these big swaths of land. And you, one way or the other, you got to increase supply, not artificially constrain demand.
We're very short of time now, and you mentioned Chartwell Retirement Residence, Sienna Senior Living, both of them listed on the Toronto Stock Exchange. Can you give me one or two other names?
Sure. We like SL Green. This is a $12 billion market cap, New York Stock Exchange listed, all office buildings in Manhattan, net asset value about $135. You can buy that at 12.5% discount in the stock market. Unbelievable. One of the best companies in the world. We talked about industrial in Canada. We like Pure Industrial, has a 5.8% yield, trades around net asset value, will be a big winner from GICS, Global Industry Classification. We talked about last on your show. New index classifications, a lot of money going to flow in the REIT sector. It has started in May. It's continuing. And they're the only institutional quality industrial player in Canada, Pure Industrial.
Let me come back to Canadian Apartment REIT and what do you think of that and the Irish residential properties?
Yeah, again, we love it. That's the largest residential REIT in Canada. Very strong management. Tom Schwartz and his team there are doing a great job. They sponsored the first and only Irish apartment REIT. I've been over there a couple of times. We hold it in a fund. Another public company, IRES, is a symbol. Incredibly quality buildings, but CAPREIT has over 50% of net operating income from Toronto apartments. The implied cap rate of the real estate in the public market stays about 5%, and if anybody knows anything about apartments in Toronto are trading below 4%, similar in BC, and so we think the stock is cheap. It has a 4% yield, a $4 billion market cap. You can sleep at night owning CAPREIT.
Just very quickly, are you still short the Dream Office REIT? Because you've done well so far. As you said, you've been on that trade for 4 years. You were early with it. Now being, as you say, just this past week, they're writing off $700 million.
We are. We covered 90% of it in December, thinking maximal pressure would be tax loss selling. They had this big announcement in February, their new business plan. What they really did is cut their distribution 40%. We shorted it again on that. We think it's early. We think it's the third inning here. We think they're going to have to cut their distribution again. They're going to hold on for a long time, maybe, but we think it's inevitable. That yield today is going to come down. They're overpaying their distribution. They got problems not just in Alberta, but they got a lot of buildings in Toronto around the airport corridor that's got 20% vacancy rate. Their net effective rent.
Jeff, we'll have to leave it at that. Sorry.
No worries.
We're cutting out on the satellite. So much great stuff. www.visioncap.ca. Jeff Olin, co-founder there. They've had tremendous performance, 222% since July 08 to June 2016. Back with my shocking stat. That's a great intro to my shocking stat. Hey, by the way, in an effort to keep up with the latest in political cool, I'm broadcasting today without a shirt. Of course, you can't see me, so maybe I can help with the visual by telling you to imagine Justin Trudeau, but with muscles. How hip am I now? Let's get right to the shocking stat. Gonna love this one. It looks like Wayne and Garth, from Wayne's World, to sit there and go, party time, party on. Well, they must be the inspiration for the athletes' village in Rio. No, come on. I know that the athletes are young and healthy and obviously horny because, come on, 450,000 condoms? That's how many condoms the IOC put in the Olympic Village, complete with bathtubs full of condoms, vending machines for condoms. 450,000 condoms for 10,500 athletes. That is 3 times more condoms that were handed out at the London Olympics. In other words, they've set a new world's record. Well, okay, at least if you don't count Wilt Chamberlain on a long weekend, but still, I won't go into that. 450,000 condoms. Are you kidding? For 10,500 athletes? Wow. That's all I can say to that one. And by the way, did that one ever make me feel old? We got to take a break. We're going to come back. We've got to talk about Ozzie Jurock. We just talked with Jeff Olin a little bit about whether that foreign tax impacts his view of what's going on in Vancouver. Well, I put Ozzie on the case. He's got his detective hat on. I've asked him, can we got any specifics yet? I mean, a lot of talk initially, but are we getting any specifics that it slowed down some transactions? Is it going to make a difference there? Also want to talk about this. Hey, you're thinking, come the summer, it's a beautiful day, you go out in the island, you want to buy some sort of island property. I mean, this is the time you get sort of hooked into that, at least emotionally. Well, he says it's not the best time to buy an oceanfront or an ocean property, rather, on an island. Well, we'll talk more about him. I've gone live to the trading desk. I've got a great goofy from the Olympics, so all of that's coming your way. Stay with us on the Money Talks Network. Coming up, I've got the big fat idea, I meant live from the trading desk. Live from the trading desk. I know who that is, though. That's Victor Adair. He joins me shortly. Right now, though, Ozzie Jerk's on the line with me. Ozzie, I want to just start with very quickly, obviously in BC, one of the top stories has been real estate. Then again, it's been on top of that, the 15% foreign buyers tax. But I think it's going to be one of those classic situations. They're adding that tax a little too late. It also a whole bunch of debate about how they're doing it, what's doing. It's really a reply to a special interest group that got cheerleaded by the media, cheerleaded by opposition parties. But can we tell at this point if it's had any effect?
Well,
on the overall market, sorry. Yeah.
Yeah, the Vancouver Real Estate Board president was quoted earlier saying this week that some 437 transactions didn't close because of it, but those numbers could be far larger because the chain of deals might be sort of extensive in so many areas. But the real hard numbers, sales were down already anyhow. You and I discussed that for the last 3 months, that detached home sales were down quite a bit, 30% or so. So when you look at last year between June 26 and July 10, the Fraser Valley last year was down about 25%. But since the tax, it's down 77% from 318 sales last year to 57. And if we get to Abbotsford, it's down 27% during that 2-week period before, and then 72% after the announcement. Again, the sharpest drop again in the single-family home. But sort of the eyebrow raiser is the North Shore. The first 8 days of the month last year, 21 homes sold in North Van. This year, 5. And in West Van, there was 29 sales, and this year, 1. So, yes, it had an impact.
Yeah, that's a definite slowdown in North Vancouver, West Vancouver. Those are eye-popping there. Again, the challenge is to sort of assess whether this is the start of a much bigger trend. But it is going to be interesting. I said all along, be careful what you wish for on this one. Real estate is the most important industry in 7 out of 10 provinces. BC leading the way there. And I really do think this was a case of special interest group politics. And that just guarantees me more hate mail, Ozzie. But I do. And the government reacting because the media cheerleads without any kind of constraint. I see in some of the commentary I've heard that you've got, of course, political opportunism, with opposition as if, the message has got to be much bigger. Governments don't control the economy. They didn't have a magic dial. So that's why we got, to tone down. Let's just turn it down 8%. It was ridiculous. Yeah. Any things that you're seeing, though? Sorry, Ozzie, go ahead.
Yeah. No, it's very true. And the other thing is, we don't know whether these numbers are going to continue down. But the stories people tell about them, and right now the stories are pretty negative.
What about, any opportunity through this? Like I'm thinking of assignments. Somebody doesn't want to close.
Absolutely, you're right on. We had our meeting in our investment club last Monday, and that's the point we made. Look at this as an opportunity. There's quite a few people that don't have the long-term view like we hold. I hold the long-term we're going to be fine in real estate, but we have had big dips, and maybe one of the ways to benefit is to look on Craigslist and what is being assigned or assignments that are being offered. Right now, there's some 79 listings. I would expect that to increase as people want to readjust their portfolio or have less faith in the future.
Very interesting. Hey, I'm changing gears for a second, but again, I'm such a sucker for this because, I've been traveling back and forth in the summer and looking at this is the time you see a lot of advertising for buying recreational property on an island. And when I started getting those kind of feelings, the tingle in my toes, I know I better ask you about it.
Yeah, well, I'm actually in Secret Cove, my favorite marina on the West Coast, plus a first-class restaurant that's rated one of the top 5 romantic places in the world. So I love the islands. I love the Sunshine Coast. But in recreational island investing, sometimes you're laying on the beach and your wife looks at you and you look at the wife and you say, we should buy something. At that point, sometimes it's better to take a sharp stick and poke yourself in the behind.
Yeah. Well, what are some of the things that people should be aware of or don't get overwhelmed with, or over the top with?
Well, forget sometimes it took you 3 ferries to get there. And if it did take you 3 ferries and you spent your holidays there, but you'll never get there on a weekend. So or buying on a no-ferry island, like where you just have walk-on ferries, with a boat access only. I know people that own property up the Indian Arm, they never go there because it's hard to get there. Now, I love islands. I mean, a close-by island. You take Bowen, it's part of the Western municipality. It's a 20-minute ferry ride. It's a third of the cost of the land. Schooling is there and all. That makes sense. But I mean, generally speaking, further away islands. Where is the property on the island? Is it looking west? Is it southwest? Try and think about where the afternoon sun is or the morning sun and what it is that you like to do. Water.
Let me ask you, if I could just, the other thing that jumps out at me very quickly, Ozzie, is mortgaging more difficult here?
Oh, 100%. You have in many places in the interior overall, but particularly on an island, maybe it's a local credit union. More often than not, it's the owner. And if you get the owner to carry, make sure you get a good long period. I would always shoot for 10 years so that you're safe when it comes renewal time, say in a year or two, and you can't find the money. So very, very important point.
The other thing you were just about to say, I know, is because I've heard these woes before, is obviously don't assume things. You don't have the same sewage as you do at home or the water that you do at home. I mean, don't overlook that stuff.
100%, because they say water well, good. Yeah, but is there enough water running to just brush your teeth? I mean, how many gallons an hour is it? Does your sewage field, conform to the regulations that were changed in the mid 2000s? Has the house passed inspection? So often on an island, the guy built it himself with a hammer and an axe.
Sure.
So you want to make sure that you really check things out.
And the other thing, of course, is that, I mean, it's a standard thing, but we got to remember, if you're getting a little too glassy-eyed over this stuff, you don't own the beach. The beach 100%. May be great to lie on, but you don't own it. Yeah.
The property ends at the high water mark. And by the way, you can buy some waterfront property, but you have to be 100 meters away in any case, even to build. And you don't own the beach. And that's why some waterfront is really cheap. You can't build on it.
Okay, now saying that, I want to talk hot property here. I bet you've got something in the wilderness for me.
Yeah, we have a 150-mile house, a nice 12 acres, and the important thing here is on a paved road. It has power, gas, phone. These are things you really miss if you don't have them. Small pond, can park your RV, build a house over it, and it's on at $89,000. So that's one of our hot properties.
What about Harrison Hot Springs?
We like Harrison Hot Springs as the last big half-acre lot. You can. The neat thing is there's a subdivision potential, maybe a duplex or 2 houses, and it's on at $250,000. So that could be a moneymaker. And then we have a rancho in Agassiz, really lovely little town, 1,250 square feet, on for $349,000. Put 69.
Oh, sorry. Go ahead. I'm sorry.
No, put $60,000 down, and your monthly payment is less than $1,400 a month. So that'd be a nice little retirement.
In Agassiz. Hey, you can get all that stuff at Jurok.com by going to the hot property button. JUROCK.com. Go to the hot property button. Ozzie, go out and enjoy Secret Cove.
Thank you very much. I am, and I will. I'm off to Thormanby Island.
Oh, okay. There you go. The thong capital of the world. That's Ozzie Jurok. He'll be there. There'll be a sighting on Hornby Island. I'll take a break. I'll come back live from the trading desk. I got Victor Adair. It's difficult at this time of year for people to sit back and think some of the big things that are happening. One of them is that the level of manipulation by central banks with interest rates and then the fallout through that. Victor Adair joins me live from the trading desk right now. Victor, are you one of 4 guys still working in August?
A lot of people are away in August, and when they're away, the volumes of the market get thin, trading's choppy. And also, a lot of things that don't seem to make any sense seem to happen in August. And then, of course, we come back to September, and it's like getting hit the side of the head with a fish. Mike, I have to tell you, here's what I see. The most important thing that's going on right now in the market, and this just plays right so perfectly to what Jeff Olin just had to say about don't be seduced by yield. I'm telling you, the hunt for yield is just going parabolic all over the world. It is a risk-on market. I think people are figuring the only risk out there is getting left behind.
Yeah, but again, this is, as I say, the manipulation of the central banks. They're artificially keeping rates low. Did you see, for example, that Italy's one-year bonds went negative? Now, this is a country with its banking system falling apart, or at least certainly on the critical list. And yet those yields, I mean, it's just not a part of reality because of the level of manipulation going on. And you're right. I mean, we talk about that all the time. It forces people to look for other places. That's one of the reasons, Vic, that I've been continually bullish on the overall stock market when a lot of the other fundamentals don't support it. I'm just saying the money's got to go somewhere. People want some kind of yield there. And that's been one of our monster recommendations since March of 2009. Get a real high quality stock with a good dividend yield. And those are the ones that are going to be in demand.
Well, certainly the stock markets keep making new highs. I would say this, that the major markets in New York are sort of creeping higher, while we'll call them lesser quality markets around the world are surging higher. Let me give you this, though. Back in 2000, there was 3% of the stocks in the S&P 500 that had a dividend yield greater than the 10-year bond. Now, 64% of the stocks have a dividend yield greater than the 10-year. Mike, and here's the granddaddy of it all. Back in the 1990s, you could double your money. If you put it into an 8% yield, you could double your money in 9 years. It now takes you 500 years to double your money with the interest rates we have.
That's a fabulous stat to really highlight that difference that's taken place. And again, it's had such a huge influence on where money has gone into various categories. And I think I love that stat also, the comparison between 3% of S&P 500 companies had a dividend yield greater than the 10-year treasuries back in 2000. Yeah, I got 64% now. Now let me come back to the markets there. And what do you make of this from a market opportunity?
Well, it's as I'm saying, it's August, and here's a great example of August. The Canadian dollar, okay, closed higher every day this week. We have had the best weekly close in 6 weeks on the Canadian dollar. We have, in the technical terms, we've got a weekly key reversal up. This is a week after we got the most horrible trade data and unemployment data last Friday that knocked the Canadian dollar down a full penny in like moments. And here we are. Now, WTI is up 14% on the week. The U.S. dollar is weak across the board. So I'm seeing this more as a case of the U.S. dollar is weak rather than Canada starting to flex its biceps. But, that's, to me, this is like an August type phenomena.
When you get to these kind of low markets, I mean, the volume is down, people are away. Do you sit in the sidelines then? Because, as you say, there's sort of some moves that don't necessarily make sense just because all of a sudden a big order comes in.
Well, I do sit on the sidelines, but, I'm not just kind of watching the cartoons. I think of myself more as like a tiger in the weeds. I'm kind of watching. Nobody knows I'm there, but when I see something, I'm going to pounce on it. And here's for instance, nobody knew this. Platinum fell $75 an ounce from Wednesday's highs to Friday's lows, and I saw that happening, and that kind of reinforced my idea that the gold market is vulnerable here. Now, I think gold goes higher in the long term, but I think gold, because we had this huge surge of buyers into gold in the first few months of this year, if the gold market's, and it's looked kind of choppy for 5 weeks now, I think it's at risk of, a little bit of a washout. By that I mean maybe $100.
Yeah. Good stuff as always, Vic. You go out and enjoy this beautiful weekend.
Thanks, Mike. You too. Cheers.
My thanks to Victor Adair. My thanks to all of our guests today. And reminder that Money Talks is brought to you by Solera Club. Solera Club is a royalty-based investment. You get paid first. It's in the tech sector, and there's no fees attached. For more information, go to soleraclub.com. Time now for this week's Goofy Award. Now, come on. I enjoy the Olympics, and I've watched several times during the week the Olympics, but it's bound to provide fodder for several goofies. You got to consider. Look at all the live, unscripted broadcasting. I mean, we've already had some beauty boners there. How about the CBC's Byron McDonald, who thought that his mic was off, and he's commenting on the women's 4x200 freestyle relay, and he said in quotes, "The little 14-year-old from China dropped the ball, baby. Too excited. Went out like stink and died like a pig." Are you kidding? Of course he apologized, and I'm sure he really regrets it, but that was still a wow comment. But there's so many other examples. But the talk that has me more than surprised is the way some of the media handles female athletes. Here's a beauty as an example. Women's 100-meter freestyle. You remember that, I hope, because, of course, Canada's Penny Olesiak won gold, tied with American Simone Manuel. And Simone Manuel became the first black American to win an individual gold medal in swimming. But here's the headline. Think about this. This is a headline from the Mercury News. Michael Phelps shares historic night with African American. I'm just found that incredible. It's even more incredible, by the way, when you consider that wasn't like off the top of the head. That was a print headline, so it goes through more than one person. I mean, how doesn't somebody go, wait a second, this is outrageous? How about the Chicago Tribune headline after the U.S.'s Corey Kodjal-Unren had medaled in trap shooting? Okay, she'd medaled in trap shooting. Here's the headline. Wife of a Bears lineman wins a bronze medal today in Rio Olympics. Like, seriously? An unnamed Bears lineman rates top billing? Look, I'm not trying to be really picky here. And God knows I'm not under the thumb of the politically correct police, but it seems a bit much. It's patronizing. I mean, maybe better words to use, but constantly hear female athletes being compared to male counterparts as an example. Katie Ledecky, I mean, unbelievable, multiple gold winner. No one can touch her in the pool. But how's she described? The female Michael Phelps. I've heard that a ton. I mean, any woman who wins multiple golds is likely to be described as the female Michael Phelps. But come on, you never hear it the other way around. You don't hear a male athlete compared to a very successful female one. No, it's too much. I mean, the media's got some work to do on this one. Hey, I hope you go out and have a terrific weekend and join me on moneytalks.net. Also, Michael Campbell's Facebook, Money Talks, Michael Campbell's Money Talks on Facebook, and Money Talks tweet. Have a great weekend.